Okay, recording. Welcome, everybody. We'll do a poll in a little bit to see where everyone is. Let's get our agenda up. Tell me if you can see the agenda. Yes?
No.
I want to hear.
Yes.
So, we've been doing this about 15 or 16 years, and most years we don't meet as usual July or August. Last year was the first time that we did. We've done 136 of these things. There's a general disclaimer, which I think everyone knows. I'm a volunteer. I'm not a professional. I don't have any licenses other than my engineering license. So we're not making any recommendations. It's all for educational purposes. I'm a very strong believer in every person taking personal responsibility for all of their own trading decisions. Congratulate themselves when they do well, and if something doesn't go as well, to say, ask themselves, what lesson is there for us to learn so that we can keep doing better? So that's my disclaimer, and welcome everyone here. I think we'll start off and do a poll. I think I have to stop sharing to do the poll. So let's stop sharing and here's the polls. So the first poll is, where are you tonight? So if you wouldn't mind clicking on the location, we got a lot more people coming in now, so that's good. I think I've got everybody admitted that wants to be admitted. I still don't see Haley in with us yet. Last month he had the flu, just terrible, but he told me he's doing really good now. Hopefully we get him soon. We got 90% participation. I'm going to end the poll and share the results. So hopefully you can see that. 37% of our attendees are back on the East Coast, so it's after 9 o'clock for them. Another good batch from Pacific. This month so far, I'm the only one from Alaska, Hawaii. Last month we had 2 or 3 of us on there. Aha, we got Cookie on now too. Welcome. So I'm going to stop sharing on that one. Good to see the good response, and I'm glad to see we got nationwide participation. So let's go to the next poll. This is an interesting one to me. Market exposure. They did this on IBD Live, maybe it was yesterday, and 70% of the responses were 40% or less invested. So if you don't mind clicking on that one, we've got about 70% participation so far, 80% participation. So I see a Dr. S on there. Dr. S, who are you?
I'm Dr. Sharon Donovan,
Where are you located?
California.
Okay, cool. And if I might ask, you're a doctor of what?
I'm a psychologist.
Oh, I think I might need some help. In the current market, we might need you. Give us some words of wisdom, doctor. You might be thinking about that. Sometime during the presentation, I may ask you from your perspective, how do you see things out there in terms of IBD style investors and what's going on? I'll give you a few minutes to think about that. I'll let you think about it. If I don't call, just remind me and say, hey, you said you wanted me to talk. I would be very interested.
He's great on oil and gas.
I'm going to end the poll. We've got 90% participation, and I'm going to share the results. This is a little different than what I saw on IBD Live. We've got 24% invested, 60 to 90%. And you can see the other numbers, 20% are pretty close to all cash. Obviously, it's a time for extreme caution. You've probably seen the messages I've been sending out when IBD has lowered their recommended exposure. Very recently, for the first time in a long time, they went down to 0 to 20%. And if you watch IBD Live, you can hear a lot of cautionary statements that has been made on IBD Live here lately. But we're all looking for the setup. It could be tomorrow. If Schumer caved in and the federal government's not going to shut down, tomorrow could be day number 1. And as we wait for day 4 or 5 before we get what Bill O'Neill called a confirmed uptrends, we need to be on our toes. More importantly, by whatever means you choose, I would highly recommend this weekend at the latest, make sure that you have a hot, fresh watch list of stocks. If we get the follow-through day, Bill O'Neill says on a true follow-through day, you have to buy something, according to Bill. What would you buy? He doesn't say to plunge you in, but maybe there's 2 or 3 stocks that meet your criteria, and only you know what that is. But like last month, I went through and showed you how I use the Bill O'Neill screen, and that's how I discovered HALO, which in this down market, Halo's been up almost every day if you've been watching it. I found that from the O'Neill watch list. Now, I'm not saying that's one that you should go buy now, but I showed you last month, if you're a subscriber to Market Surge, then you would have access to the Bill O'Neill screen. And there's many other screens you can use. So the other thing I wanted to show, let me go back and share the screen. Can you see the agenda now?
Yes.
I'm going to scroll down. The lines are pretty thin, but I used the Market Surge comparison tool. If you have Market Surge, I recommend you take a look at it. But what I did is, this is some of our leverage ETFs and ETNs that we watch. And this particular graph, let me blow it up just a little bit. This particular graph is year to date. And then I'll show you another graph of the full 12 months. Notice last month, one of our members mentioned that they were invested in YINN, yen, which is Chinese market. And then I've been invested quite a while in Nugget, which is 2 times the gold miners. And there's also a GDXU, which is 3 times the gold miners. I think GDXU is up maybe 80% year to date. And today it was up 10%. There's a little table on the top left of the normal ETFs that we look at. The best one is FAS, and it's down 9.2% year to date.
Why do you think China is doing so well? Their economy, all their stocks are doing really well.
I don't know that, George. It may be someone.
China declared a stimulus package some time back. So that's why the market took off. It was October last year. Then it came down a bit, regroup, and then again started moving up. And right now it's going a consolidation. So if our market turns around, I'm expecting them to go up. I have a position in FXI, which is Chinese ETF, and then YINN, which is a 3x of that ETF.
Okay, thank you. Thank
There is a link by Fidelity where they put out which countries are going through recession and which countries are moving out of recession. Currently, China is moving out of recession and Canada is also slowly moving out of recession versus anything else in the world moving towards recession.
Well, I know that some financial advisors for the last 10 years have been recommending European stocks, and they've been long every year. But I think I've heard recently that many European countries their public companies are doing better finally, maybe for the first time in a long time. So there's things going on out there in the world. We've got this crazy tariff thing, and it just seems like there's knee-jerk reactions. I heard today that Trump said if Europe put a 50% tariff on American whiskey, he was going to put a 200% tariff on all the beverages from Europe. When is this going to stop?
Haley is here now.
But George?
Haley is now.
Okay, thank you.
Have fun.
Okay, cool. So I'm going to scroll down now using the same comparison tool. This one's a little more crowded. This shows the same companies. I picked 7 or 8 companies, but this shows for a full 12 months. And you can see yen's up 117. It says 117% on the table on the left. The only one down is SOXL, down 60%, while TQQ is down 4%. So there's just a lot of blood on the street right now. I'd like to go back and look at this prior table. You can see that virtually all of the ETFs we've been monitoring, if you're using our stochastic buy-sell strategy, you know that all of them are in the sell zone. I can bring up a trading view or a thinkorswim tape chart if you want me to, but they've all been in the sell for quite a while, and it's best to sit on cash and wait for the right time to get back in. That time is coming. I'm certain of that. It's just not now. You've heard the old adage, if you try to catch a falling knife, you're going to get cut and bleed. Some people have been cut and bled because they didn't realize how strong this direction was going to be, and they thought some of the stock prices were bargain prices, only to find out that they were headed 5, 10 or more % lower than what they paid. And so then if you're following the Bill O'Neill trading strategy, if you buy something and it heads down like that, then you have to sell it and take the loss. You don't hang on to it and just hope, because hope is not a strategy for sure. Let me stop sharing then and go back to the agenda. So the next item on the agenda is to look at the big picture, which I recommend that you do every single day that the market is operating. To me, this is one of the highest value products that IBD puts out. I read this every day, and I watch the IBD video also. Because we've had such a huge correction, I'm going to spend just a little bit more time on this. Notice it says the Dow Jones.
Seen it.
Oh, thank you for letting me know that. Let me see. What did I do wrong? I appreciate you saying that.
Sorry to interrupt.
Oh, I would have felt terrible if I'd kept talking. Can you see the big picture?
Okay, now we got it.
Thank you so much. So today was written by Scott. It says the Dow Jones Industrial Average tumbled 537 points as investors battled with the threat of more tariffs from Donald Trump, reeling from losses. S&P 500 closed in correction territory. I think I heard today that the S&P is in the worst condition it's been since June of 2022. So blue chips lost 1.3, extending losses to 4 sessions. S&P sold off 1.4%, falling 10% from record high in February. That's a technical definition of a correction. NASDAQ tumbled 2%, about 14% off of its record high. Russell declined 1.6%, and the Russell's down 19%. And that's why some of our ETFs are down so much, because the indexes they follow are down, and we're down. With the levers ETF, you're down 2 or 3 times. And if you have SPYU, you're down 4 times. So 10 of the 11 SP 500 sectors decline, with communication services and consumer discretionary facing the losers. Utility sector was the only gainer on the session, while materials held only a slight decline. President Trump threatened new tariffs on European Union, warned in Truth Social points the U.S. will place a 200% tariff on all wines, champagnes, and alcoholic products coming out of the EU unless it removes its 50% tariff on U.S. whiskey. When you start having this kind of action with other countries, you just wonder where is it going to stop? Dow Jones, inside the Dow Jones 30, Salesforce, Home Depot sold off more than 4%. The 2 stocks accounted for 186 points, or a third of the Dow's drop. Verizon and Travelers were gainers. On the NASDAQ, Adobe plummeted 14%, Grail almost 13%. Adobe reported earnings. Intel jumped 14.6% after the company announced its boards appointed Lip Bhutan as chief executive after a 3-month search. All of the Magnificent Seven ended lower. I think we all know that. So I like to look at Market Pulse. And Market Pulse is this little box here, a little rectangle embedded in the big picture. This is where we see the recommended exposure down, all the way down to as low as it can go. Can't go any lower. Notice the stocks up in volume. COBE, the trading company. You got a gold company, financial company, a pharmaceutical, and then these are down in volume. I recommend you look at this and read this. You can read the whole thing in 5 minutes or so. There's some really good information here. We're only going to do this at 125%. I just remembered when I go to the share box, I have to say share sound. Can you see the window with the IBD video here?
Yes. Yeah.
So I'm going to start it and let me know if you have sound.
Yes.
So just be patient. There's some really good information on here today.
Good afternoon, everyone, and welcome to Stock Market Today. It's Alyssa Quorum here, Thursday, March 13th. More red on the screens today as tariff woes continue. Joining me now to break down today's action is my colleague, Ken Shreve. Ken, what do you have for us today?
Yeah, lots of uncertainty in the stock market, more selling in the indexes today. Let's stay in the insurance sector. Take a look at Allstate, ALL, in the biotech group, Vertex Pharmaceuticals, VRTX, and also in healthcare, drug distributor McKesson, MCK.
All right, let's take a look at
Looks like our screen froze up here for some reason. Cut my video and maybe that'll give us a little more bandwidth. Let's try it again now.
the major indexes today, even though we don't want to because they don't look too pretty. Nasdaq down another 2% today, Ken. The S&P 500 down 1.4%. Same for the Dow. The Russell 2000 down about 1.5% headed into the final stretch of the day.
Francis,
The Dow continuing to make
if you look over on the left side of the graph, you'll see there are two gaps that we need to fill. This one here and this one here. So we're not going to be over with the downtrend until we fill those gaps.
Are you talking about over here?
Yes, around the July time frame, just before August the 1st, those two gaps, we're going to have to fill those gaps. And there's also one or two on the S&P that are coming up in the next day or two that we're likely going to have to fill as well.
Is that my good friend Cookie?
Yes, it is. I'm sorry for interrupting. Please
Oh,
go.
no, Cookie is amazing. She sends me links to so many fantastic newsletters and stories. I'm forever indebted to her. Some of those are extremely valuable, Cookie. Thank you for doing that.
Could you point out those gaps again, please?
Right here. And so we're over here. If you bring this line straight over, that gap and that gap haven't been filled. And according to her, they have to be filled, which means we have to come all the way down to about here, which means we have a little more. If in fact that is true, we have maybe another 500 to 1,000 points of additional loss. And look how far we're below the 200-day here on NASDAQ. And obviously, it's a time of extreme caution, and cash is king. Thank you for interrupting, Cookie. That's no problem at all. I'm going to start it up again here.
lows. The S&P 500 undercutting recent lows. The NASDAQ here barely not undercutting the lows, but that doesn't mean it's looking great for the NASDAQ either.
Still a rough day in terms of the Nasdaq's percentage decline. It does look like volume really dried up yesterday on the upside when we got that first day of a rally attempt. It was actually pretty light. Mentioned on IBD Live earlier this morning, during the first hour of trading, even when the selling seemed to be intense, there wasn't a lot of volume in the market. That did hold for a good part of the day. You can see right now volume pretty close to what we saw yesterday, which was light. The one saving grace for the Nasdaq today is that it held literally 1 point above Tuesday's low. Technically, the rally is still intact here. Day two of a rally attempt did not look good at all, but because we held above Tuesday's low, we'll continue counting the rally attempt and see where we go.
All right, let's take a look at the S&P 500. Looks like we did close above that 5,500 level, but not by much.
That's a round number that held today, 5,500. Low from Tuesday was undercut. Just in terms of the S&P 500 rally attempt, we're back in a position of just looking for the first day of a rally attempt. It can be up 0.1%, it could be up 1%, it could be up 2%. Just looking for an up day at this point and then some follow through soon after that.
Okay, let's see. Comments on blue chips, Ken?
Still looking for the first day of a rally attempt here. Blue chips regarded as a safe haven, but a weak market tends to bring everything down with it. So even some of these liquid, large cap blue chip names are still under a lot of selling pressure here.
The Russell 2000 small caps continuing to look pretty bleak, and we do now have a close below that 2,000 level. That goes back a pretty long ways, Ken.
This is another index that's under a lot of distribution and just highlights the difficulty of this market. When we're looking for signs of strength in the indexes, we'll keep our attention focused on the NASDAQ composite and the S&P 500. Pay attention to what rally attempts look like. See if we can get some follow through, some sign of strength, some hint that new money is coming in from the sidelines. I'm certainly not seeing it in the Dow and the Russell 2000. Really not seeing it much in the NASDAQ and the S&P 500 either.
Ken, let's briefly talk about the 10-year Treasury yield. We had CPI yesterday, PPI data today, and both reports, on the face of it, you would think we would get positive market reactions. A lot of cross currents out there in the market, primarily focused right now on tariffs. What do you make of what we're seeing with the Treasury yields right now?
You can see that 10-year yield trying to firm up and hold support at the 200-day moving price average. The wholesale inflation data, as measured by the producer price index earlier today, was very similar to what we saw in consumer prices yesterday. Softening prices, that means that inflation is slowly headed in the right direction. Still a little bit elevated, but the market responded okay to pretty good inflation data yesterday. Did not react to pretty good news from the producer price index, which was softer than expected. We're in a market that's under distribution. Bond yields have firmed up, but they did reverse lower today.
All right, next on our list, we want to take a look at GDX. The gold miners continue to be an area of strength and a notable move here for the gold miner ETF. GDX up 3% today, now breaking out of a cup with handle base. But this is something that we've been tracking, that relative strength line over the last couple of weeks. And again, breakout.
Yeah, we were watching GDX set up here, and we were watching a lot of gold miners and gold producers, silver stocks just outperforming in this market. Gold is an inflation hedge, at least it has been in the past. So no surprise to see money flowing into gold and other precious metals stocks here. This is a really clean breakout for GDX. Typically, when the market's in a correction, heavy volume breakouts are going to have a hard time making headway. But because this is gold related, it held gains well. There was a good increase in volume today. Just a picture perfect breakout and what a technical breakout should look like. Still in buy range from that 42.66 entry within the 5% buy zone. As we mentioned on yesterday's show, it makes sense to have some exposure to gold at this point, and I think today was an opportunity for some.
And I think it'll be interesting to see how this breakout ultimately plays out. One would think if the market uncertainty continues, this has a pretty good chance with gold being that flight to safety area. My concern is, though, if you look at the prior history of the stock last summer, when it got support off of the 50-day line, it did pull back a number of times there. So again, it'll be interesting to see, will this breakout work and will this have room to run?
Yeah, as long as the tariff headlines are coming out of the White House, if the tariff uncertainty at least starts to come into better focus, if the market can start feeling a little better about what these tariffs are going to mean for economic growth in the U.S., that's what the market's trying to figure out here. You have some economists saying that if there is a negative impact on the economy, Trump is saying the same thing. Minor Treasury Secretary Scott Bessent said the same thing. If there is any economic disruptions, that should be short-lived. But there are other economists think that tariffs are just going to keep inflation stubbornly high as costs are passed on to the consumer. So you can see both arguments, but as long as uncertainty is out there, it's going to be a very choppy market environment, and wouldn't be surprised to see gold continue to work here for a little while longer.
All right. We're continuing to see defensive stocks like insurance names in focus, with Allstate up 1.9% on the day. It works on the right side of the space, underscoring its price performance versus the S&P 500 as of late. Price outperformance versus the S&P 500.
Yeah, this is something I talked about on IBD Live this morning. A lot of insurance stocks breaking out to new highs, showing great relative strength. Allstate, even with a relative strength line in new high ground, hasn't broken out yet. You can call that 199.03. It was probably an early buy signal there, but it's been pulling back. Even yesterday, there was a good shakeout in Allstate. It closed up near its high for the day on Wednesday, so there was definitely some support in there. Low volume rally today. This looks like it's sitting around a new entry. There's always a bull market somewhere. The insurance stocks have turned into a nice flight to safety here. Fairly stable earnings growth for many of these names. So this is a stock that's been outperforming the S&P 500, even though it fully hasn't broken out yet. As long as gold is working, insurance stocks could have more left as well.
And just a reminder for the audience, even if there are stocks or ETFs setting up and breaking out, doesn't necessarily mean you have to trade. IBD's methodology says that when a market is in a correction, our team updating as of a couple of weeks ago recommended exposure down to 0 to 20%. It's a good time to be cautious. If you do want to take on trades, manage that risk with position size, with a stop loss. It's good to know what is showing strength out there so you can get a better feel for the market.
Yeah, I mentioned very lightly invested for the leaderboard model portfolio earlier this week. We gave ON a shot, knowing new buys are risky in this environment. It's just floating right around where we entered, maybe 2 or 3 points below our entry. We knew the risk, but the invested percentage at the time was 16%. We went up to about 21% after this ad, so nothing too aggressive. If we go to the daily chart here for this Ireland-based company, just still holding near its 21-day moving average and flirting with that 395 left side high buy point. I'd like to see it firm up here at the 21-day line. If it doesn't work, we'll keep our losses small, but felt insurance exposure was worth a shot here.
Yeah. Healthcare, another area that some flee to when market conditions are tough. Here's a stock in the biotech group, Vertex Pharmaceuticals, up 1.5% on the day. It's shown a lot of relative strength in recent weeks. Another good one for the radar for investors, because this can be more of a growthy area as well when the market is rocking and rolling. Potentially a good one for the watch list as we wait for the market to turn.
Yeah, a whippy stock lately, but it's been a stock that has been in our growth screens literally for many years because it just has a good track record of earnings, a very dynamic pipeline. When the stock first started rallying, if you go to the daily chart, when it really broke out or moved back above the 200-day moving average, gapped up above the 450 level, I think that's when their non-opioid pain reliever was approved by the FDA. It has a new growth driver with this new non-opioid drug. Approval wasn't a big surprise, but it's continuing to show relative strength. You can see it popped over the 500 level pretty strong early in the session, but sellers knocked the stock off a little bit off highs, still in that 5% buy zone from a 491.81 entry. So still, we talk a lot about gold and insurance, but a lot of biotech stocks acting well besides Vertex. It's been a long time solid name in the group.
Let's go to McKesson. This is ticker MCK, in the medical sector in the wholesale drug supplier group.
So I'm going to stop it and start it back up again. Let's see if it unfreezes here.
Even higher ranked than the previous group in the 60s out of 197. This group ranked number 22 out of the 197 groups that we track. An interesting name here as it sits in a buy zone near highs.
Yeah, and a stock that has long-term leader qualities. So you can see that earnings stability rank at 7. The lower the number, the better here. Stocks with an earnings stability rank of 1 have a very stable, consistent track record of earnings. 99 is the worst. McKesson, good long-term track record of earnings here. If you go back to the daily chart, drug distributors typically have very stable earnings growth that don't really swing due to economic conditions, recessions or not. This is a very defensive area of the market, known for consistent growth. And this chart looks a lot like the insurers that have been seeing money flow here. Breakout from a consolidation, pull back in light volume to the 10-day back and buy range from that 632 pivot. So you can see where the money is flowing in this market. And if you want some exposure to typically defensive names, I think the 3 names we talked about today are ideas, but like the way McKesson looks here, very high ranking industry group as well.
All right, Ken. Thanks so much as always. We appreciate it.
Okay, I'm going to stop it right there. I hope you found that productive. I try to watch that every day, and there's some really good nuggets in there. As I mentioned in one of my last messages, if you haven't watched IBD Live, I'm pretty sure they have a trial subscription. It comes on about the time the market opens. They start about 10 minutes before the market opens each day and go for about 90 to 100 minutes. I find it very useful to hear what they say. They sometimes have some excellent guest speakers also. Next on the agenda, Haley, you're giving a presentation. I don't know if you joined us yet or not. When one of your fellow California members, Dr. S, told us that she's a psychologist, and after you give your presentations, she's going to give us some words of wisdom to those of us that are investing in the current market. I'm interested to hear what she says, but we're going to let you go first, Haley. So you're on mute right now. Let's see. I'm going to allow you to share your screen.
Thank you. Let me go ahead and share my PowerPoint presentation.
Okay, there you go.
Can everyone see my presentation?
We can see the now.
Start on the wrong slide of it. There we go.
So
So I'll talk a little bit about the psychology of stock market trading right now.
just before Haley gets started, I think most everyone knows Haley and I are in a transition phase right now, and by the time we get to May, he's going to be taking over the Anchorage IBD group, and then I will be available on an as-needed basis. But it's time to get some new blood in here. I'm 76, and I've been doing this for 16 years. Haley's a young dog, and so go take it.
Thank you very much for the kind words. I think it's interesting timing right now that I'm going to be talking about the psychology of stock market trading. As you guys know, I was sick with the flu last week, and it took 3 weeks to fully get over it. So it's like, and kind of 3 weeks ago, the market started cracking a little bit. So we take a look at the whole market itself. About a month ago, it really started cracking. So that presentation was lucky timing because I was just thinking, what am I going to do with my portfolio? How am I going to balance it out? So I did go into all cash about 1-2 months ago because I just didn't like how the sideways market was going. And I was just thinking about why I did that. Because a few friends was telling me, like, wow, that was really good timing for what you did. So that's why this presentation came about, because of my own trading style, I went to. Thank you, Cookie. So disclaimer, this information is presented for educational and informational purposes only and should not be interpreted as investment advice or a recommendation. I am a volunteer and not paid for this presentation. Investing carries significant risks, including the possibility of substantial losses. You should conduct independent research, carefully consider your financial situation, and seek professional guidance before making any investment decisions. Neither I nor any associate individuals accept liability for any investment decisions made based on this information. What's up, George?
What was the one determining factor that made you go to cash?
Bill Neal says that there's a few ways to read the market. It's based on my own portfolio. My own portfolio wasn't really doing well. I'm picking stocks. I'm trying to pick winners, but it's just not moving according to the bull market. And also, I always think about how far in are we in a bull market, which I'll show on the chart. Everyone has different beliefs about when bull markets start. But if I take a look at the monthly chart, am I 18 months out from the bull market? So I just count. And this is about 18 months out for me. I was like, you know what? Maybe it's time to pull back a little bit because I made is I've done really well in 2024. And I'm like, really highs are always followed by lows because I believe in the theory of regression to the mean, meaning highs are followed by lows or little highs and little lows or things like that. So that's what kind of made me is, you know what, cash in a position, and I'm absolutely fine with being in cash. So just take a look. Let's say the bottom, let's say we started moving around 2023 and about 18, and we're about the end of 2023 is going to be 1 year. It's going to be 24 months at the end of 2024. And now it's going to be about like 27 months. And that's a long bull market, especially from a bear market that happened in 2020, that happened in 2021 and 2022. Does that help answer your question, George?
Oh, yes. But there was one specific day in the market. It was just a feel.
It was just like, maybe it's the greed taking over my mind where I'm like, why am I not making more money? I'm spending so much time on this and I'm just picking losers after losers. Usually when that happens, it's not the time to push on the gas pedal. It's time to release the gas pedal and think about if I should hit the brakes, because I can't force the market to do what I want. The market always tells me what to do. So once I notice when I'm trying to push the gas pedal when I'm not supposed to, I'm trying to go faster than I'm supposed to. That's when I'm like, that's an internal look time of when I should hold off and maybe even should start selling and just take a break. I made some profit. Let's just use that money and go on vacation.
Or get the flu.
Or get the flu. One of the things I have is that flu kicked my butt. I was in bed for about a week, sleeping like 20-hour days. It was insane. I can't manage anything right now. I was awake for an hour and I'm like, this is so physically exhausting. It was absolutely ridiculous. So I'm going to talk about three things. It's about our own emotions, what gears in our heads we can use to develop our own winning mindset. Are we trying to force the market, or are we trying to read the market for what it is? And as always, someone has told me, anger stems from your belief. It's your own belief of the world and the actual belief of the world. And when there's a huge discrepancy from your belief and the actual world, that's where anger comes from. So that's how we're going to start finding our psychological balances and out what emotions are coming up from us and how to work through all that. So as I mentioned to George, my emotions really drove my investment decisions. Yes, I do have my foundational rule set. Yes, it's all written out, but there's an art to investing. Are the big fund managers trying to induce panic selling? Are the big fund managers like the Daily Contra Fund trying to put in more money to make their investments move and try to make more money? What's going on with market? Is it a euphoria market where everyone's trying to say, hey, this is the time to buy Bitcoin because Trump's making a Bitcoin reserve? Or is it more, hey, everyone else has made so much money, I'm gonna just put even more money? So I always try to have my own personal trading. I try to have a certain percent that I want to make every single year. And once I make anything more than that, I'm great. One thing I learned from another IBD leader is Ralph Desmond. Ralph Desmond told me, say, you have a yearly goal, and that's a 1Y. If you reach above your yearly goal, that's great. For example, let's say my 1Y is 20%. If I make 20% a year, I'm doubling every 4 years, and I'm very happy with that. Last year, I made almost 80%. So I was like, you know what? That's a darn good year for me. And I'm really happy with that. And I use some of the money to just have some fun with it. So the other emotion that comes, and it's a really big emotion, it's like fear and greed. It's almost like a slow creeping emotion for me. So when fear comes on, you have to say, what happens to you physically and psychologically? That's one of my favorite things about the stock market. It's a test of what you think of the world and what the world actually is. If there's fear or I'm being greedy, like how's my bank account doing? Sometimes you spend more, sometimes you have higher bills. Or are things going? Are we trying to make more money from the stock market? Are we just trying to make as much money as the stock market will give us? That's always my key thing. I have to go back to the foundations of where am I? What am I trying to get from the stock market? Am I trying to push it? If I'm a whale, I'm not even a dolphin. I think I'm just a little fish in a big sea. I can trade daily volumes easily of 10 million. I won't move the needle because I'm not trading that much. But of course, daily stock volume of $10 million per day, it's very thin. The whales, the dolphins can come in and move that needle quite a bit and cause turmoil, because 7%, that's my stop loss. That's an easy number to hit. You have to use your rules, your 7% stop loss, preset rules for yourself. Sometimes I'm wrong about 50% of the time, and that's okay. But once that batting average for me goes above 50% to 60 or 70, I'm like, am I choosing terrible stocks or the market telling me something that's going to happen? How's the market telling me? How's the big picture? So I am honestly a little bit surprised when IBD was still investing to Allstate versus pharmaceuticals and AON. So I was like, wow. Then I looked at investors.com. I'm like, oh, I'm part of the old school part now, even though I'm young. It's like, it used to be when a market's in correction, there's 0% invested instead of a range. And they're using a range of 0 to 20%. This was before Dow Jones bought Investor Business Daily, where Bill Neal is still running. We're still having the Master 7 seminars too. Any questions on fear and greed? Anyone? So now it's overcome regret in trading. You can imagine you bought one stock and then sold it too early. Or rather, give an example, a personal example. Elf, an old elf. So we're talking about overconfidence and regret in trading. I remember this day very clearly. Usually when we see a big blue bar, we see this over here. I did an earnings play. I actually took a 7% loss on this. And I bought it at $70. I had a 7% stop loss, so I sold it for $74, $75. And actually, I'm going to go to this day, February 3rd, 2023. So this one day was a heck of a day. It closed on a 25% profit. So I actually kept it instead of sold it intraday, which was really hard because if you look at how low it went, it would have been really hard trade because I bought at the open because it was an earnings gap up, and then I sold at 7% and just kept on going down. But by the end of the day, it actually recovered. These were a mix between emotions and rules. My rules tell me that if it hits 7% below my intraday, I can sell it because initially I do remember it going up, and then all of a sudden the stock started going down. Once it started going down, I was like, ugh, I think my sell rule. But then once I didn't keep track of this 50-day bounce, I'd go forward in time a little bit. As we know, ELF started stepping up with another earnings gap. It went up again. And then it became a darling of the stock market. From that $70 buy point, I would not have been able to keep it over here. Let's be honest. I probably would have been able to keep it maybe, I'm not sure, because it hit below the 50-day moving average. I would have enough of a stock profit cushion. Then I definitely would have sold it on this day because that's a classic sell rule. It's 14% below the 10-week moving average, and it's on high volume, and it's the first daily break. So I would have sold it around here. So what have I made? 70, but the last one was 105. Would have been pretty good. Be about 50% profit range and a 7-month hold. Maybe not. But that little elf story is the regret in missing a bigger winners. So could I have leverage in more? I went on margin. Could I have done well? Or does that give me a little bit of overconfidence because it says, hey, I can pick really good winners. I can do this again. But I remember that time I was not picking the greatest of winners. This is one stock changed my whole investing psychology because in 2023, I didn't do super well as 2024. So those are like few things to always kind of just keep track of for yourself. It's that, what are you currently trading? How is it currently trading? And how the market is doing. So what I always like to compare is, how's the NASDAQ doing? How much percent off its high? I'll just go to QQQ. Pretty much the NASDAQ. Oh, it's because I didn't reset it to today. That's why it was not telling me off 52 weeks highs. So NASDAQ's off about 30% off its highs. And as we know from Bill O'Neill, he states that growth stocks typically are 2 to 3 times more volatile than the general market trend. So the NASDAQ is about 13%. NVIDIA is about 24%. So 2 times, a little bit less than 2 times. How is Meta doing? Which is not too bad because Meta has a huge run up from 2022, about 5x. How are these stocks doing? Are certain stocks resisting the market or most likely going into a correction mode? We'll see if we go into a bear market mode. If they're only 1x and they're doing 20% growth rates with triple-digit earning rates, that's definitely a stock to watch out for because it means institutions are buying. If it's red, they're decumulating. If it's black, they're staying the same. If it's blue, they're accumulating more. So I think as traders, we all know the rules of stock trading. Floyd mentioned before, there's something called the marble test. Pretty much random things happen. You choose a number, how much you want to invest. Do you want to invest 6% of your portfolio? You want to invest 10% of your portfolio? The market just doubled. There's a 25% down. And just keep on picking your percentage. If you invest 100% at one time, a down day is going to happen and the market is going to turn. But if you invest 6, 7, 8, 9, 10% of your portfolio, depending on how the market is, if there's more up days than down days, you'll probably do. You don't ever want to set a risk more than a set percentage per trade, which is your portfolio. And there's two ways to make sure that you're okay. One is to sell enough stocks to make sure you can sleep at night. And the other one, it's to diversify enough for you to make sure that when the stock market is not trading, assuming it's not a 24-hour market, that you don't have to think about it. There's a subconscious relief for yourself that you can actually let your subconscious mind work through your own portfolio. Sometimes we think about it nonstop, all day, all night. We can't let our subconscious mind work it through. And of course, please stick to the stop loss strategy. 7, 8, 9, 10%, maybe even 14% stop loss. If you have a half position, that keeps you in check, making sure you're not being a cowboy. Lastly, don't try to take revenge on the market. The market's bigger than you. It's going to come back and bite you in the butt. And there's always an importance to the trading routine. He just said that every single day he reads the big picture. That's part of his routine. He wants to make sure that he's not stuck in his own world, that there's still input from the world coming to him to change his views. We have recurring thoughts that keep coming day after day, and it turns into an echo chamber inside our own minds. When that happens, we tend to go away from our own routine. I want you to hear those thoughts in your head. It's saying, that's when I need to check on myself. I need to have a little bit more once you find it, it's self-awareness. It's like, hey, I'm having these thoughts. Once you have those thoughts, you'll be like, hey, what can I do about it? Is there something I should do about it? How does it affect my trading? How is my portfolio doing objectively versus the stock market? If the NASDAQ has a bounce the day before, am I buying today because it's 3% below the 200-day moving average? Or does it go down? Do I buy on rally days? Does that mean I bought on March 12th, March 7th, March 5th, February 28th? If you didn't, why buy on this day? Because one of the rules says rally day below the 200-day moving average, I can buy it. If so, what's my batting average? Every time I've bought below the 200-day moving average, did it work? Would it have worked during 2022? You would have had a lot of buys, is what I'll tell you, for about over 2022 all the way to 2023. There would have been a lot of rally buys. Some of them would have worked, but generally speaking, it went sideways and down a little bit more. So that would have been a rough ride. And that's always a question to ask. How did it affect my psychology? And the answer is, it didn't affect that at all. It's not if you're lying to yourself, because we're the easiest person to lie to. So what I always like to do is I like to breathe. In the sense of breathing is that it calms down my nervous system a bit. It slows down my heart rate. It helps me soften revenge trading, because I'll be honest, I do revenge trade a bit. Dang, I really lost money on this. If I have bad trades in a row, it's revenge trading. I'm trying to make the market do something that I wanted to do. I'm not really trading good stocks. I'm not trading something on an IBD 50. Where am I even getting my stocks? I have a ton of screens. I look at weekly earnings, small sales, the IBD 50, my own IBD 50. I look at IPO breakouts. Where am I getting all these from? If I'm really revenge trading, I have to go back to the IBD 50. Because it's a really good list. It's some of the top stocks on the list. So how am I doing? Let's pick a better looking chart. How am I trading the stocks? Am I really trading at breakouts over here? Or I'm saying, hey, you know what? I've been trading for 10 years now. I can definitely do a early buy. I'm going to go over here. I'm going to buy it here and I'll keep it. How am I doing? Or it's like, hey, this is a deep cup. I know the cups can be like 20 days and I can do a little better. Or it's like, hey, there's an earnings gap. Can I buy it early? How's it doing? Or a day like this day or that day. hurts when it buys. I have a feeling, even though it closed in the bottom half, that's a huge weakness, especially such a large price with such low volume. That's the importance of just having that meditation for myself. It's important of my own trading routine. And if you say, hey, I don't have a trading routine, I'm gonna ask, do I have one? Do I wake up at, I'm in Pacific time. Do I wake up at 5:30 in the morning? Do I brush my teeth? Do I have my hot water? I don't have coffee right in the morning, but I have my coffee around 7 a.m. I wake up at 5 a.m. because I like a little time between. Do I have my own meditation? Am I doing my foam roller stretching in the morning to make sure that I am still in my daily routine? And if I skip a few things, why am I skipping? Is there something that I rush to my computer to? Is there a certain stock that I'm gravitating to? Why am I bringing up all of a sudden a random stock that I'm thinking about? So when you have a fundamental set of rules and routines for your daily routine before you start the trade, and once you deviate, ask yourself, why am I deviating? One of my favorite authors is definitely for psychology. Is definitely like Amos Tversky and like Daniel Kahneman. So the author of Thinking Fast, Thinking Slow. That's what really got me into the psychology of this. I told myself, I'm not special. I'm a human being. I have certain biases. I have certain feelings. I have certain tendencies. I was also born in a Western world where it's a little different from the Eastern world, where culturally I'm born from. So I know that Daniel Kahneman's from the Western world, which has similar thought processes to the environment I was brought up in. His most famous one is confirmation bias. I think the stock market is doing well, and I think it's going up. So all of a sudden, I'm going to go to my screener and say, I'm going to go to my IPO breakouts. The stock market's doing well. And typically in a stock market that does well, IPOs do well, small caps do well. That's not the case right now. IPOs have been doing just absolutely terrible, but I can find that perfect example of, hey, that one IPO stock is doing well. That means it's actually doing really well. There we go. Landbridge. It's a real estate play. So I'm surprised that it did as well as it did. So, hey, Landbridge is doing well. That means I hear the economic report. House prices are still at all-time highs. And this example says, hey, the stock price is doing well. So I'm going to keep on investing. I'm going to keep on pressing the gas pedal. That's confirmation bias. You find that perfect example stock to confirm what you're already thinking. Loss aversion. It's that, if I remember correctly, please correct me if I'm wrong, it's that I think losses affect our emotions 2 times more than positive. There was a study on this saying, even though you had a 25% gain, that 7% loss is probably going to hurt more. But once you have a 50% gain, that 10% loss goes away because it hits harder when you're wrong than when you're right. So there's a little puff of the chest when you're right. But when you're wrong, it's what happened? Did I choose wrong? Is it just luck of the trade? What happened? And of course, recency bias. If I've been performing well, recency bias is pretty much what happened recently, time-wise, has more of a weight than stuff that's happened in the past. This is a stock market, right? If we have 3 good days, does that mean it's a really good day? But usually in about a week, the stock market can always change. So you have to see. The stock market has been, let's go back to QBQ. So that's probably something traded. So recency bias. You can tell from a stock. Oh man, the stock is going down. It's in the middle of last year. Oh no, the stock market is going down. I shouldn't trade. As I keep on going on. Oh no, this is just a rally day. Look, it's definitely still a bear market. Look, it went down. It tried to go up, but went back down. But as we all know, this is the rally. August 5th is definitely the rally. And as we start going, this is day 1, day 2, day 3. Do we have a fall through day? Once we have a fall through, that recent buying season is just gone, which is probably 2.5%. That's way more than any fall through day. So it's like, right over here, we have to buy because that's our rule set. It's Bill O'Neill using a fall through day rule. They've gotten 100% of all bull market using this rule because there's a lot more false positive than there are a lot more false positive because you can't go fall through day. You can immediately just go down. How is this most recent downtrend affecting your trading style? That's right over here. Because if you sold right over here on this terrible day, pretty much it's 30% down. and you bought it right over here, hey, that's a nice little gap, isn't it? Here to here, they just saved you a few bucks right over here, this little gap. And that's the rule set helps us. It helps prevent this pain and gets us back over here. So this little delta that we made from selling to buying, not too bad. So you always have to make sure that how recent is the memory? Is it 1 week, 2 weeks? And as always, stock price can't change within a week. And I have a feeling this doesn't apply to our group right here because it's our mentality. We tend to be a little bit more analytical versus the meme stocks that are going on. Are we all trying to go into GME or GameStop? I don't think so. I think we're really trying to find stocks that are on daily chart. Are we trying to find stocks that are making more sales and making more money? So what's happening with GameStop? They're making less sales, but they're making more money. Are you guys closing stores? Are you finding corporate staff? What's going on? So like meme stocks like this, due to our rules, we just don't buy it. Can't even look. Are institutions owning it? Heck no. Our fund's not in it. We talk about Vertex. Sales going up. Earnings are a little funny right now. But how's the estimates in 2025, 2026? It's actually going up. So it might be okay. We looked at growth funds owning it. So this is okay. There's some big money that's around here, and maybe we can tag along for the ride. I only have about 2 more slides left. There are some rules that can help you with emotions. Stop losses to eliminate emotional decision making. That 7% stop loss will help reduce any more losses. If you went to the San Francisco IBD meetup, Charles Harris was talking about his Tesla play. I love charts, so I like going back to the charts. Let's look at Tesla. We can tell emotion being played right over here. This was our previous high before our most recent high. It was right around 400. You can tell it's, hey, if I had a 10% stop loss, you'll probably be right over here. But you've had 7% stop loss, you bought, let's say right over here. The breakout was decent because the volume was right over. The volume was above average. And you took your profit at 25%. Perfect. But what if you kept it? What if you're saying, hey, it just reached a high, things are going good in 2021, we're at COVID. What happens to the rest of the stock? What are you feeling over here? Is it such a dejection that all of a sudden we go over in March in 2022? You're like, oh, that was right. It's going to come back up. It around 384, then it starts going down again, and it goes down to 200. What emotions are happening here? When you go from 380 to 200, it's almost a 50% loss on you, especially if you're only on regular folio. If you're on margin, it might be 75, it might be 80. But by the time it hits here, this is like a 70% loss on just regular with no margin. What's happening? Do you need a margin call? What's going on? This kind of emotion on paper where it's like, hey, I have some hope. Hope gets destroyed. Then you're like scrounging the cash for money as it starts going up. As hey, I was right. Look over. We just cover this box and just look at it on the left side. We'll be like, oh, it's consolidating right over here. There's maybe a 20-25% gain. It's a very tight area. And we're just going to keep on holding it. That's, oh no, hit the bottom of the base. Oh, that's a great time to buy, right? Now we're bottom fishing because unless you have rules for this, we're bottom fishing and be like, oh, it'll be fine. Then all of a sudden, oh, I just took a huge loss the week after, which is 15%. So that's why those stop limits are really cute because you're trying to make sure that it's like, hey, I'm doing well. Or those stop limits is because you're trying to preserve your capital. You're trying to make sure that you still have money to make the next play. Because when capital goes to zero, you can't make any more money. And of course, you do want to set realistic profit. So I'm going to go back in time. Luckily, we can do this with technology. Again, Tesla is like, oh my gosh. It went from $25 to $400. I can make almost 20 times my money. Yes, it has made 20 times, but let's take a look at what's the market cap. So you make 20 times more. This will have to be almost a $15 billion industry. Is there any stock in the world that's $15 trillion? Is Microsoft 15 trillion? No, it's not. It's only about 3 trillion. How about Apple? Oh, I don't buy Apple enough. I just can't honestly tell. Oh, you guys can't probably tell my time right now. It's the middle of the night for me. We're setting realistic profits only 3 trillion. Is it a realistic profit goal for Tesla to hit a 25x? Not because it hasn't been done before. Or Nvidia's not that high yet. Can Nvidia go to 5 trillion, 10 trillion? Probably. But how long would it take? 2 years, 3 years, 4 years? Depends on the growth, right? Because everyone's buying their chips right now. Everyone's talking about AI. Is Nvidia going to be the key player that's going to be driving this? Are they going to provide the right hardware? Is it going to be raw material that might be driving the growth? Who knows? It depends on your own personal opinion of how that industry is doing and also how the market is doing itself. I was talking about batting average a few times. You keep a journal. For me, Excel sheet and a Google sheet, because I use those in tandem to update each other. I use those to make sure how I'm doing, how's my batting average. I always keep an update every single quarter because I do it once a year. If I'm really good about it, keep an update once a month because stock market changes every single month. If you don't believe me, take a look at monthly charts. If we look at January, pretty darn good. We're up 2%. Then all of a sudden, we're down 2% in February and in March. So far, we're down 7%. Every month kind of changes a bit. We see some topping action over in the end of last year, but every single month is a little different. This month, a low of 420. Oh, I'm QQQ. Go to NASDAQ. I'm not used to these numbers. The low is 15,700, but the high is 18,000. That's a 3,000 delta. What does that mean? Wow, our stock market kind of moved over 10% that month. Can you handle lows? Can you handle the highs? How were you acting during this month? Every month is a little different. These tight little months right here, they're the easier ones. Sometimes. Depends if you're trading the market or you're trading individual stocks. And lastly, I always tell people cash is a position. Take a break, be in cash, just get that 3 to 4% interest rate your money market account is getting, or you can invest into it in income in ETF. You can invest into some kind of bond or treasury and just buy it for a less than 3-month treasury. And just say, hey, I'm making money on this. I'm not paying my federal taxes. If you have no state taxes, you're not paying any taxes at all. Take a break. It's okay. So 4 things for me, for my psychology that helps it: discipline, patience, adaptability, and emotional control. And one thing I want to emphasize is this emotional control. This makes me smile because I remember putting this little guy with horns. Why emotional control? There's a certain saying in Buddhism. It's you have to know, how do you phrase this? You have to accept that I can't control my emotions and I can't only direct it. I am not in full control myself. I like to pretend I'm in control. The reason I say that is I'm human. Environmental factors affect me. If I'm in the Middle East and it's high humidity, high heat, that affect me. When my environment itself is not conducive for me to have my daily meditation, have my daily stretching, what am I doing? Because I think this is most of traders' end game. It's that emotional awareness, emotional control. Yes, we can stick to a trading plan. Yes, we can be a little bit robots, but it's mainly this feel part of the market that we really need to get down. Yes, we do adapt to market conditions. It really shows on our portfolios because buy stocks, we sell stocks. We make sure that we're not holding until the ends of time. Unless you've been holding a stock for 30, 40 years. I hope it's Nvidia. I hope it's Apple. I hope it's some of those few huge winners over those decades. We might have 8-week hold rules or end-of-day hold rules, but that key factor for all of us is emotional awareness and control. And that is the end of my presentation. So if anyone have any questions, if there's slides you guys want me to go through, if there's any particular stocks you want me to go through, happy to answer.
I have a question.
Yes, George.
During a correction or if we enter a bear market, do you scratch your watch list and do a brand new watch list?
My watch list is always my buy ready list. So I always edit it slightly. If I'm in a bull market, I'm really lazy. I just keep adding and I have 50 plus items. Once I'm in a bear market, I usually go through my list. What's near pivot? Stocks near pivot, right? Earnings is up. There's a little gap up on earnings. There's a handle that's forming. So this might be pretty good. Sales, earnings, good. This gets added to my buy ready list. Of TradeWeb. That's okay. It's not the most exciting stock for me. It's a slow mover. I want a little bit more oomph to it. Sales are okay. And once I do that, I'll go back to my buy ready list on Sunday night and be like, what am I buying? Is this still buy ready? Nope, it's not. I haven't cleaned this up. I need to take that away for about 3 weeks. So I haven't really checked the market as diligently as I should and update all my lists. All I do is keep up with the daily market actions and get an end of day report and see how it's doing.
And your list has 10 names on it.
Yep, but this is a little old because I pretty much near the end of last month, I just went on vacation because I'm like, this is a terrible market. And also I planned the vacation and it just didn't do that well.
Gotcha. Thank you.
I shouldn't say luckily, but the market just didn't turn out well.
Haley,
Thanks.
Haley, this is Rick Berry. I was wondering if you could let Ken Smith in. He's trying to get into the webinar. Thank you.
I do not think I have admin controls. Hey, Floyd, if you can let Ken Smith in, we'll be back momentarily. Is there any particular stocks anyone wants me to look over, or is there any particular slides people want to go over?
Celsius.
LH. That guy goes in and out of my watch list all the time. Oof. I have tried their drinks before.
It's fighting the downtrend.
Let me look at this. 34. Today's low is about 26. 26 divided by 34. About 23%. I know that was about February 21st. It's about minus 23%. I don't think it's really fighting the downtrend. Earnings are terrible. Institutions are still owning it. Earnings going down. Estimates, though, are going up. It's been flat lately. It's not really high octane, in my opinion. Any other stocks? Hey, Jordan. Hey, Floyd. Can you hear me? Thanks, Floyd.
I was on mute and didn't realize I'm here.
Were you able to let Ken Smith in?
I see the message here from Dr. S. That one.
I should definitely read this. I'm going to read this out loud. It says, keep track of your emotions and understand your strengths and areas of vulnerabilities and blind spots, especially under pressure. Manage your emotions by surrounding yourself with positive and optimistic people and engage in nourishing activities to keep a clear mind. Keep involved with stress-reducing techniques such as massages, listening to music, exercise, laughter, humor, theater, sporting events, walks, hikes, volunteer, and etc. Stay calm, control fear, panic, and the urge to do something in the market before you have steady stocks on the watch list. Plan your trades, create your plan from a position of strength and wisdom. Writing out your emotions and trading plans help to manage your emotional reactions because the physical act of writing anchors your decisions and helps you focus on what is most important and manage negative emotions. You used to have a lot of writing journals, both in the nighttime and by trading to see where I'm at emotionally. But sometimes winning trades happen when I'm actually highly emotional. I remember some bottoms in the market where I'm like, you know what? I'm just going to try. No rules have told me to do it, but I'm just going to try and see what happens.
Well, I appreciate what she did there sort of complements your presentation. I appreciate that very much. So any questions?
Is there any other stocks people want me to look at?
As I mentioned before you joined us, Haley, Schumer said that he was going to cave in and the federal government was going to shut down. I'm looking at the pre-markets right now, and in the pre-market, the Dow's up 206, S&P up 40, NASDAQ up 182. Now, we don't know if that'll hold through until tomorrow because sometimes the pre-market doesn't really tell us what's going to happen, but I find it quite interesting. We're due for sometimes they call it like a dead cat bounce, and so just because we have a really good day tomorrow doesn't mean it's time to jump in. But if anyone has a stock you'd like Haley to bring up, or go ahead and mention it here. We got a little bit of time.
I'm going to go through a screener. I'll show you how I kind of screen stocks. So one of the screeners I like, it's my 100% sales stocks. So stocks that are making 100% sales. I'm not sure why this guy popped. It's making 100% sales. What I usually like to bring up on my right side is the mutual fund ownership index.
Cool.
Because I want to make sure the big players are in. So I'm going to take a look at all these guys. How are they doing? As Scott St. Clair said, he likes making the J shape. So I look onto the left. Estimates are good. Increasing fund ownership. Sales are great. Fundamentals are great. But Credo maybe has some credibility.
Yeah.
So we're taking a look here. It's definitely taken a huge hit. It's going to take a massive amount of time to recover. But earnings are there and sales are there. This might be interesting, but it won't be on my list for another few weeks. I know it'll pop up again. This is too volatile. I'm just going to skip it. This is probably way too small.
It's got no funds.
and it's got nothing. That is just terrible. Sales, earnings. What I tend to do for my screener, I'll also open my edit, is that I try to get as much of the stocks as possible.
Which is your favorite 2 or 3 screens?
My favorite, I'm a sucker for IPOs. So IPOs is usually my favorite, but if I'm short on time, it's always going to be near pivot screen and the IBD 50 screen. It's just something that is close to breaking out because I know it's consolidating, which is right over here. And I'll show you, I'll also screen from the near pivot list, and I make sure the average sales at least 25%. That's it. And I comment industry is something I try to see. How's my industry group doing? Am I in 2, 3? What's my top 100 screens? Medical, leisure, lounging. But let's go back to this. I haven't checked the screen in a while. And I want to see what's going on over here. How's the breakout? That's actually a pretty good breakout, but it hit 7% stop loss. And this is also sideways movement. I want to see the monthly chart. No, pretty much since breakout, it's just been volatile. So not touching that, huge red bars, not touching this. Oh my God. But you can tell why this is not one of my favorite screens. I don't touch it as much, but I'm lounging, relaxing. Just take a look.
Yep.
But especially in bull markets, this is what I like to check.
Sure.
This is capital, this is REIT, this is fine. Just all these technical, Astria Labs, even though there's so many funds, I don't even want to calculate this. High is 147. You're 55% off its highs. No, 2 to 3 times. This is not 2 to 3 times. This is like 4 times. Yeah, almost 4 times downtrend, which is just a hard pass.
When in the comments, someone asked if you would do PLTR.
Of course. 36% its highs. That's right at 3x the current downtrend. But this is a massive uptrend right before. So that's good enough to analyze. I'm not sure why there's no mutual funds holding this. That's weird.
How about PLMR?
Sales went up 7%. Sales is good. Estimated earnings. My earnings line is going up. This looks good. Third stage base. 1, 2, 3. Yeah, that's a third stage base. Let's see how it did on breakout. Ooh, that's nice. 90% plus volume. Insurance is coming back. I wonder if that's because of California and on a bunch of other states loosening regulations on insurance, so they can actually increase insurance fast at a larger rate, so they can actually make money.
Yeah.
Yeah, so maybe that's the macro play coming in right now. Because there's been hurricanes, floods, and everything that's going on, and I know multiple states are trying to deregulate insurance a little bit. They're trying to loosen the regulation.
One they talked about on IBD Live today was BOW. Go ahead.
This is nice. There's hedge funds buying it. There's increasing earnings, and the earnings have been revised up. Mutual fund ownership's going up. Sales is great. Earnings is great. Estimated it's good enough. I don't know what's going on in March over here, but it looks not too bad. And we go to the daily chart.
It's
And even draw.
another insurance play. Professional
Go ahead, special.
provides casualty and professional liability products. So it's not like they're insuring homes, I don't think.
Let's find out. Homes? Nope, they're not doing homes.
Yep.
Professional and healthcare liability. Definitely a specialty insurance company. But how would they grow bigger? I always worry about insurance because I know it's a defensive play. There's something coming in with insurance that has been done in 200 years or 100 years at least. So I always have that worry about the end factor for insurance plays.
Look at the sales. It went from 59 million per quarter up to 220 million in just a couple of years. Something's going on there.
Something is definitely going on. Maybe they're going to be the new insurance player. But they're a $1 billion market.
Notice on the chart on the far left about the middle, just down, look at the similar companies. They have that PLMR that we're just looking at, EverQuote, Allianz, Swiss Re, and I can't tell what the last one is. A lot of times I find companies worth looking at that I never heard of by looking at that box on the weekly chart.
That is true. Which industry is this? 41 out of 197? Let's look at this whole industry. So the biggest one is Allianz. So that's a $150 billion market cap, which I already know it's life insurance company. I don't know what PI is. Insurance banking and asset management.
In China.
I know. Insurance diversified.
Yeah.
I'm not sure if Bowhead belongs in this category, actually, because I guess they do. They have three different types of insurance: professional, healthcare, insurance specialty. It says insurance diversified. Let me take a look at the industries really quick. There we go. So there's life insurance, property, casualty, title, diversified, accident and health, brokers. No, I guess this does belong in this group, if those are the only choices. Bowhead, it's a multi-billion-dollar market. The biggest player is 50 billion. Brokers, 100 billion. Property, casual, and title. Oh, it's progressive. Of course it would be. 163 billion. So they have a lot of room to grow for Bowhead.
So let's take this a step further, if you don't mind, Haley. Stuart.
Yes, sir.
Back to Floyd's point about move your left screen or left side of your screen, close it so we can see the window. I'm looking for the sales and the list of stocks. There you go. Floyd, I think we've talked about this some in the past, but if you're looking through these, are you going to then go to a comparison chart up here and see how these stack up against, say, 3 or 4 of them stack up against Bowhead?
Not screen, Haley. Close that down and go to the thing that looks like a window there. So that'll default to 1 year. You can put in several different names and see how they compare on any time period you want.
And my point here is oftentimes I look at this, it gives me an idea. You're looking at some of the things like the EPS and the relative strength, but it is visually helpful to see how they measured up over the course of a year.
Sure.
Are there other ways that you use this tool, Floyd, to screen? Do you look at the best performer? Are you looking more at trends? What are you doing?
It depends on what I'm doing that particular day. Sometimes I'll compare stocks from different industries, or I may like for example, put SPY in there on that symbol list, and so look at SPY, and I'll put in the 3 Qs, so you can see at least for the last year or so that any one of these 3 listed are doing much better than the market indexes. Sometimes I'll compare indexes across industries, but when I fine tune, I like to do what Haley's done here, bring up Bowhead and Palomar to make my final decision. One tool that's out there, sometimes this comparison gives you a totally different view of what you're thinking about doing. I find it extremely helpful, like I showed earlier, when I'm comparing levers ETFs. Sometimes the differences are fairly dramatic.
Yeah, I'm with you. It's given me some surprises that I wasn't expecting and caused me to rethink the path I was going down.
Sure. Thanks for making that comment, Stuart. Where are you right now, Stuart?
I'm in Montana.
Okay. We're getting close to out of time. Someone asked a question here. Why don't you stop sharing, Haley, and I want to share. Someone asked a question about, is it a good time to buy TQQ? I appreciate that question being asked. Let me share my screen here. This is TradingView. Can you see that?
Yes.
So this is TQQ, and this shows stochastics right here. You'll notice that the fast line is well below the slow line. Right now, the fast line's at 18, slow line's at 31. So we're nowhere near a buy point. And I don't know if I've got, here's Thinkorswim. So Thinkorswim for TQQ, we use the top part of the stochastics. What are they showing? 10 and 20, I think. If I'm reading that correct, I think they're showing 10 and 20 fast and slow. We were asked a question, basically, if we're following the strategy, we want to wait until the fast line does a clear move above the slow line. If we're following the weekly strategy, so you would wait until near the Friday close after the fast line moves above the slow line. The earliest that could happen would be next Friday, and I doubt that it will happen that soon. If we look at FNGA, which used to be FNGU, for some reason they changed the symbol. We're well below. I hope that answers the question about is TQQ a buy or not? And at least if there may be other strategies might give a different view, but from the weekly stochastic strategy, the answer is no, not even close. So I'm going to stop sharing now. Any other questions out there before we sign off. I appreciate the comments we had tonight, and especially A, that was an excellent presentation. Just before we sign off, questions or comments?
When did you get out of Kiki?
Let me look at my journal if you can't remember. It's been quite a while. I'm paging through my journal here just so I can answer correctly. I do a lot of trades, so forgive me. I'm just taking a look here so I can answer correctly. I think I need to go in the other direction. I'm fine. 321. I just found a page here. Let me go back for a minute. I know I sold FNGU quite a long time ago. FNGU was probably the first one that I sold.
21 of last year?
Oh,
Did you mean February 21st?
let's see. I'm just flipping through my journal. I bought FNGU at early January, and I'm just trying to see when I got out of FNGU. For the last 2 years, that one has just been an amazing performer. I ended up taking a steep dive, and I was really tempted to sell it. When I finally did, it was on one of those serious heavy down days.
I think you meant 221.
I've got so many trades going here that I'm just trying to find, and I don't have the best memory, so let me just look and confirm. Actually, let me look at my journal. Let me see. Next time I'll be better prepared. I don't want to give you an accurate answer. Oh, look. Okay, I see I'm getting close now. Yeah, it looks like 220, 224 looks like the date I sold. And I just went to cash.
Okay, that's for both, right?
Yes, I'm out of all of them now. I sold SOXL even before that, but the cash is the king right now for those leveraged ETFs. Absolutely.
Thank you.
But better days are ahead. I'm committed. The strategy basically says when you get the signal, you go 100% in. My guess is, and it depends on what happens on the day we get the signal, I probably would leg in 50% on my first buy and then not buy any more until it goes higher. And then if it goes higher within 5% or so, I'd be 100% back in. With leveraged ETFs, you have to be willing to move quickly and not hesitate. When it's starting to move, we want to catch a good percentage, maybe 70 to 80% of the run-ups, and only experience 10 to 20% of the downturns, because you're not ever going to hit the exact high or exact low. But if you can consistently catch 70 or 80% of the waves up and not suffer more than 20% on the way down, if you can do that consistently over a period of time, you'll do very well. Our back testing proves that clearly. I hope that answered the question. Sorry for the time it took me to look at the trade journal. I'm doing a lot of option trades right now. I've got a large number of option trades that I have to flip through my journal. I write when the buy order occurs and is executed, when the sell order executes, I immediately write them down. No matter what's going on, I write them down very clearly. The date, the time, the reason for it, the number of shares, the price, etc., so that I don't leave anything to memory. And I do it right when it happens. I don't let myself say, I'll catch up on the weekend, because that just doesn't work for me. I got to do it as it occurs. And it also causes me to stop and think just a little bit. As one of my short spots is I need sometimes to slow myself down and think before I pull the trigger. A piece of advice I have is after you fill out your order ticket, stop, take a couple of breaths, and review the order ticket and make sure that the order ticket is exactly what you want to do. That if you want to buy, you're buying. If you want to sell, you're selling, especially on options. If you have a multi-leg option, you have to look very carefully to make sure that when you execute, you're really doing what you planned on doing. I would say 10% of my order tickets, when I go back and look at it, I'm going, oh, that's not what I wanted to do. And I catch myself. The other day, I had to call up my brokerage firm and I said, why can't this order execute? And the guy said, let me look at your account. And he says, because you already have an order and you're trying to put an order on top of an order. And I said, sorry for bothering you. I should have realized that. I had placed a limit order on a particular security and I was trying to do another order, and the limit order was preventing me from doing the second order. By calling the brokerage, I said, oh, that's my fault. I messed up. My advice is just slow yourself down a little bit. I don't know if anyone else has that happen to them or not. No, never, Haley. Okay, I think that
Happens.
unless anyone else has any other comments, we're after 2 hours here. I've got the meeting recorded. I will send the link to the recording and a copy of Haley's slides, probably no earlier than tomorrow afternoon and no later than Saturday. I appreciate everybody hanging in there for presentation. Haley, that was a good presentation, and we had complimentary comments from Dr. S. Unfortunately, she had to dive out, but maybe she'll listen to the recording. I think there's a lot to think about in terms of the psychology and the emotions, and to get ourselves more rule-based and not emotion-based on our response to market action. Just before we hang up, let me do one quick look. On the commodity side, gold hit 3,000 for the first time ever today. On the pre-markets, we're still showing a heavy upside is what's being predicted. We don't know if that'll be true in the morning, but don't be surprised if you see a big spike up tomorrow, mainly because it appears there's not going to be a federal government shutdown. So thanks everybody for participating. It was April 10th.
Floyd.
Yeah.
So you heard today that the Senate had gone ahead and ratified the CR?
I haven't heard that the vote actually occurred. Schumer made a public announcement that the Democrats reversed their position and they were not going to block what was passed in the House, and they were going to support it to prevent a federal government shutdown.
Okay, that's good. I look at the BPIs, and they're over on the stock charts, and I gave some symbols. I just did a text of the NASDAQ BPI. So if you click on that link that I have in the chat, you can see what I was looking at.
Let me click on that.
I look at these every day. I look at the ones for S&P 500, the NASDAQ, the New York Stock Exchange, and the NASDAQ 100. So I look at those 4 every day.
Can you see the stock chart screen here? This one is for NASDAQ.
So that's the NASDAQ. And so I have the ADX up top. That's the chart in the top part. If you see around the 21st, the minus DI was going up. In the lower part of the chart, that's the MACD on the BPI.
Down here.
And it crossed also on about the same day, February 21st. In the middle is the chart of the actual BPI. It started going down on the 20th or 21st. And the other 2 things made me feel like it was true. And that's what got me out of the market back on the 21st or 22nd.
Excellent. Thanks for sharing that.
Yeah. And I have a chart for each of those other 3 as well. If you don't generate more than 3 or 4 items on a chart for stock charts, you can look at it free of charge, but you can't look at inter-day. You can only look at the day chart, which is usually sufficient.
Thanks for sharing that. I really appreciate it. I think we're going to sign off for tonight. Thanks for everyone that hung in there with us. We got 18 of us that are still here. I think we had about 30 at the peak. Be careful out there. You could get hurt. The whole catching a falling knife adage that traditionally, if you try to catch a falling knife, you're going to get cut and bleed. Get that watch list freshened up, and everyone have a good evening. Thank you.
Good night, Floyd.
Good night, everyone. Thank you.
Good.